We are back at it again here with another video with Invest for Tomorrow, and in today's video we are going to talk about what's going on with the S&P 500 index and are we going into a correction or crash. I talked about key levels to watch in the last video, but today there has been some headlines that have created a lot of FUD, uncertainty and doubt overall in the markets, and how this is actually something that is beyond anyone's control, but you have to be prepared and aware. So we're going to break it all down in today's video. And there was something I was looking for as confirmation in the last video that I talked about with Ultimate 42 Vision and 42 Vision, which we're going to break down in today's video. But before we do, I want to share with you guys the home run opportunities I mentioned on Wednesday. I did not trade today, but a lot of members went ahead, looked over these charts of these same stocks, and if you look at them today, they went up another 10 to 20%, 20 to 50%, turning into home runs for today's trading day. I did not trade today, but I did trade on Wednesday, and these same stocks turned out to be home runs again today. So look up their charts, see how they performed on Wednesday as well as how they performed today to see for yourself. And we're going to jump right into it here with everything going on this big pullback on the 30-minute. We're going to look at the 4-hour with the S&P 500 index, and I'm going to share with you guys some of my opinions and thoughts in the overall market. So here we are with the S&P 500 index, and after pulling back big today, we're going to talk about what headlines caused this and how to react to this to be able to be one step ahead of what's really going on. But we need confirmations, right? So one of the first things is the SPX and the S&P 500 index is pulling back. If it tries to jump back up and turns out to be a fake out, I'm going to share with you guys some of the things I'm going to be doing to be prepared, okay? And I was looking for a confirmation on the 4-hour with Ultimate 42 Vision that I'm about to share with you guys as well. So why did this all happen? Well, it has to do with these headlines. New COVID, okay? No pun intended. Very interesting that it's called the new COVID, not NEW, but if not NU COVID. And that variant rattles the stock markets. Now, it didn't just rattle the stock market. It rattled almost all the world markets you can think of. Also, crypto. So, right now, this is all fresh news. I remember when there was a variant that came out earlier in the year. It was called the Delta variant, and we still know about it. That one created a lot of FUD and fear and uncertainty and doubt. Now, I'm not saying that the same story is going to unravel because scientifically they might be different, okay? If they are alike, well, we saw what happened with the Delta variant and we saw what happened with the S&P 500 index. It just continued going on its route, okay? Something to think about, something to be aware of, okay? That doesn't confirm or mean that the Delta variant is any less or the new variant is any less or any more. But if you read through these articles, they are stating some very key things that every single investor should be aware of, and everyone around the world should read at least at one moment, right? At their earliest convenience to understand what's going on with this new COVID, because what they're saying is, this is where the fear, uncertainty, and doubt comes from, that vaccines might not be as efficient against this whole entire new variant. And that's something to be aware of. But interesting enough, vaccine stocks were going up and airline stocks going down. When you see this correlation, this might be the beginning of another rotation. So I do want to throw that out there. Look for stay-at-home stocks, quote unquote, or stocks that have to do with probably growth, and see what's going on with them. Doesn't confirm that a rotation's happening. And then look at vaccine stocks as well. And then look at airlines and also cyclical stocks and the reopening plays and see how they're doing to get a feel of the markets. Now, there's something else that I stated in my last video, and it has to do with the consumer spending reports and numbers of Black Friday and Cyber Monday. And they're already coming out with FUD in these articles. The S&P 500 and Dow Jones Industrial Average are on pace for the worst Black Friday in over 70 years, okay? Now, they do some research here and talk about the past on how Black Friday came about, what it meant, what was the goal for it, and how many people would actually go out and try to do these lines or set up and get these items as quickly as they could. But the first thing that comes up right here, the word fear of the fast spreading new variant of coronavirus is causing the US stock market to become unhinged to the end the holiday shortened week of trade. Okay, with the drop setting the stage for possibly the worst performance for the Dow Jones and S&P 500 index since the 1950s on a traditional Black Friday shopping day. So we haven't even seen the numbers yet, and they're talking about how terrible Black Friday is because they're correlating it to the fact that after Thanksgiving comes Black Friday, and the stock market historically at least tries to bounce up in anticipation of big numbers of consumer spending and so forth. But all of a sudden, on the day of Black Friday, we get this news, this FUD, and information about this variant, almost implying that no matter how great the numbers are for Black Friday, the Black Friday numbers might not be as great as we think, or if they are good, they can't overdo or override this new variant, FUD, fear, uncertainty, and doubt. Okay, so could we go into a correction? Possibly, if both of these add up together. So if the variant seems worse than it is, than what the articles are saying in the next following days as we get more information, that's one thing. And the second thing is the Black Friday numbers and consumer spending does not meet expectations, or is less than year over year or the years before, or less than expected. Those two together are one catalyst to create an even bigger pullback, okay, on the 30-minute and the 4-hour. We're going to talk about the 4-hour now in just a second. But let me show you guys as well how the next following days and weeks, and maybe even months, is a small blip to the bigger picture. And this is where pullbacks, okay, are the setups for the next bull run. So this article I came across it comes out, a day before or two. And it says the S&P 500 index will cross 5,000 next year as companies make excess profits and trillions of dollars in spending are unleashed, says Jeffries. Okay, this is an expert analysis saying this. Doesn't mean it's true, doesn't mean it's going to happen, but just looking at the fact that it's possible and we're not that far from 5,000, I think it's something to keep in mind and have the mindset that these dips, okay, are not setbacks, okay? These corrections, okay, and pullbacks are not setbacks. They are setups for the next bull run. And we're going to talk about this here now in the charts. And I'm going to show with you guys the levels I'm watching. Once again, pay attention to cyclicals versus reopening plays versus stay-at-home stocks and vaccine plays to see what's going on and where the money's going and how people are reacting, because even though this is going down, this is just the overall markets, but individual stocks and sectors are going to be moving according to what's going on, okay? There's always a bull market somewhere or opportunity. So, in the charts with Ultimate 42 Vision, as you see here, which you gain access to by joining the 42 Vision tier level, you can gain access to the daily watch list, weekly watch list, community of investors, all looking to learn and grow together, and the opportunity to have the clarity every single investor deserves to maximize on opportunities based off the charts. So here on the 30-minute, you could see that it was starting to pull upwards. That bull indicator popped up and quickly got transitioned to a bear one, and extreme weakness came into the charts, okay? That's on the 30-minute. Something I was looking for, though, was how would it react on the 4-hour, and if on the 4-hour we were getting that bear indicator, okay? Because things were actually pulling downwards. They try to come back up. It's been under a bull indicator since way down here at 4,328. Went all the way up here to 4,743. Got rejected, and we needed to see if the correction was forming. I stated that in my most recent video as things were pulling back and shifting. But we did not have a bear indicator. Today, on the 4-hour, a bear indicator has been confirmed and pulled up. And what we need to see is it going to try to jump back up and do a dead cat bounce or a bull trap, okay? Bull trap would mean that it actually just jumped up and we're going to fall down and it's going to trap everyone here. And the same thing, dead cat bounce. They're both different terminology, almost the same thing, but both react based off of different things. So dead cat bounces that this went down so low, and a lot of people get excited and see it as a discount and push it right back up, and then when it pulls right back down, it turns into a bull trap. So both of those together create the story that might unravel. If that happens, look at this volume bar as well. I mean, that is a huge red volume bar compared to all of these in the past. And the last time that happened was way back here on September 17th. Guess what happened the next few days? It went from 44.60 all the way down to 43.04. It's not guaranteed that it's going to do the same thing. It's not guaranteed that it's going to keep pulling down. But this bear indicator, I was waiting for it because once it pops up, it takes a few candlesticks before it changes into a bull one. I mean, look at this bear from here from 45.12, and it took until here at 43.78 to say that it was a bull and trying to reverse after that big pullback. Now, this is just the beginning of a pullback on the 4 hour. So even if we get a small candlestick right next to it, right, and it has the wick pulling down and it looks like it's trying to come back up, like this one right here is bigger and this one's smaller and it tried to push up, under this bear indicator, no matter how much up and down is happening, okay, in volatility, and that's the goal with Ultimate 42 Vision, the upgrade that's coming up, and 42 Vision itself, it's to remove the volatility and focus, right? So even though it goes up and down, and if we don't get another bull indicator like this one down here, anywhere around here or anywhere up here, if the stock keeps jumping up and it still has this bear indicator, it is signifying that a specific level has been met, that even though through the volatility and the ups and downs and the bull traps and the fake outs and that run up, you know, and a dead cat bounce and then falls right back down, and this whole thing happened and it creates that, you know, confusion and people think it's going back up, and this is still there and there's no bull indicator, that means that we are bound to reverse and come right back down. We don't know how far, but there's weakness in the charts that are signifying a further pullback even from these levels. Okay, we're going to see how things play out, because if it turns back around and we get another bull indicator, then that's different. But right now, we just got the bear indicator that I was looking for on the 4 hour even before this news came out, because I was expecting a correction regardless, through some of the uncertainty and doubts of the consumer spending on Black Friday and Cyber Monday, and then the debt ceiling issues that need to be resolved in the beginning of December. So here we have it. 4 hour, it sent out that bear indicator. On the 1 day, it has not sent it, but that's a big transition, and this transition was another transition we were watching. It sent a bull indicator down here at 43.87. It had not sent one since way back here of a bear indicator at 44.69 until it pulled down and started to reverse. And right now we're in the pullback section. It went straight to red. It skipped the green with red borders, and that means we might be on our way for a bigger and fuller pullback. Okay, this is just the beginning. We need to watch this carefully and see how things continue to play out. So some of the key levels I'm going to be watching, let's pull up the 4 hour again here so we could see it. First thing is down here at this support level, okay, 45.51. That gets broken through, I'll be watching that carefully, and the next support level will be down here at 44.50 and all the way down here to 43.30. Okay, keep those numbers in mind. Those are the key levels right now I'm going to be watching closely, because if we break through all the way down here at 43.30, we could be on our way towards a correction, and then we have to zoom out and look at some key levels around these areas down here between 4,000 and 4,300 to see where this could finally kind of level off and get a feel of what's going on once we've confirmed how bearish this is looking. But corrections, guys, I want you guys to understand, are the setups, okay? These are not setbacks when they fall down like this, okay? These are the setups for the next bull run to continue pushing higher. Look at this right here, okay? That looked like a setback. That looked like a bearish correction right there. And that was the setup, all right? This is where the opportunity started for this leg up, okay? This is where opportunities begin. It's not where they end. It's where they begin. And this is where the opportunity is attained and obtained, okay? Opportunities are forming right now, and that is just the setup for the next bull run, guys. As always, thank you guys so much for watching. I look forward to seeing your thoughts down below, and let's make some money.